Hello guys, today we try just to see this puzzle of buying and selling on the same time. You ask yourself always, let's say you decide in the morning to buy a stock, okay? Let's say 100, 500, 1,000 shares, 5,000, 10,000 shares, whatever you like. And then you find someone else who is selling to you. So you ask yourself, who is wrong? Is it you or is it him? Now, this is the puzzle of trading. It's based on the opinion that you have and other people's opinion. So each one has an opinion about a stock or about an index or about the mood of the market. Now, let's say you think you see the stock is going up or the index is going up, and you decide to buy the index like an ETF or a stock. So this is your opinion according to your strategies, according to your techniques, according to all what you know. And you think that if this continues, you will be making money. That's why you want to buy a stock. Now, on the opposite side, you find someone else who owns these shares that you are buying. Okay? And he is selling to you. Now, what do you think? Do you think that he thinks that the market will be going down, that's why he is selling? Or that he has this stock for 1 month or 2 or 3 and this is the day he wants to sell? That is the matter of opinion. You find another one from the other side, he is selling short. He thinks that the market today will go down. So, the summary of all this is that understand that in the market, it's your opinion versus other people's opinion. But, like a democracy, the people who are more powerful, having more shares, either to buy long or to sell short, are the winner. And this is called the direction of the day. It means if you are going to do day trading, you understand that there are a powerful people. So for the day, each day is unique. It means if you go, for example, to whatever stock you like, you find that this day is unique in terms of price, in terms of the low, in terms of the high, in terms of volume. The volume always is changing. Okay? Now, the main thing that you should put in your mind is that there is a power of direction. And this power of direction, sometimes in the day, it doesn't move only one way. It can move in many directions. For example, you find a stock, you just at 9:30 a.m. you are following a stock and today you want to trade it. So you have no idea, there is no news, there is no information in the market, there is no news, big news or something. So you will never know what will be this day. But in the morning, you see that the stock from 9:30, it begins to go up. Now you have an idea that it might be a good day, so you buy shares. After 10 minutes, 20 minutes, the stock's going up, stops going up, and then it begins to go down. Other people think that since it stops, it's going down, it will be a bad day for the market, so they sell short. Okay? And then the stock can go down for 10 minutes or 20 minutes or 1 hour, and then it can reverse and go up again. So, in general, you should follow this big power that moves the day. And this is what we call the fluctuation of the day. That's why some people, they can't understand day trading correctly. It means they think that day trading, it means just at the 5 minutes or 10 minutes, the day is known. No. Sometimes you should wait a little bit more to make sure that the day is up for sure or down for sure. Now, a lot of people who are really into day trading, whenever there is a move, they will go with it. Even if it is 5 minutes, 10 minutes, 20 minutes, half an hour, going up, then it go down. So they buy, they make some money. When they begin to think that the stock is going down for sure, they sell short. It's like this. It's like a perpetual movement of the price. And these people are following the price wherever it goes. When it stops going down, for example, and it's going up, they will reverse. Okay, if they are selling short and they think that the stock stops going down, it means there is no more money for them, and they begin to lose their profits. Even if it is 5 minutes, 10 minutes, or 20 minutes, they cover back and they buy long, and they see if the stock is going up. If it's going up, they are right. It means they are moving from buying and selling, and then selling short, covering back, or later buying back and then buy for long and then sell at the end of the day. So it means there are many directions in the day. And you ask yourself how these people can make money. You can buy a lot of shares when you expect not to stay too long. Okay? So instead of buying 100 shares and the stock is $10, you can buy 500 or 700 or 1,000 or 1,500, depending, or 1,500 shares, depending on the stock price and depending on how much you can afford to buy. But understand that day trading is for the people who are quick in taking decisions. If you are not quick and you don't have a real plan and you don't have experience, you will be losing a lot of money because you don't know. You might, for example, buy at the beginning of the day and it's going up and then it stops. You see it stops and going down, but you don't exit. You begin waiting, you lose your profits, and then you begin to lose your money, and maybe you stay more and more and more, and maybe the day is red, and then you lose a lot of money. So before you do day trading for true, if you are just a beginner, if you are just beginning to trade, you should wait. You should practice with few shares only in real. Because for me, virtual, you can do virtual just to see your broker, how it works. Okay, you see how to buy, how to sell short, how to cover back. These things you should know about your broker. So buy just few shares for 3 months, 6 months, 1 year, until you know very quick, you know very good how your platform works. And then when you begin to see that you can make money and you become so quick in day trading, and then you begin having large trades. Okay, and for those who are really try to do day trading, you should have some money. Okay, more than $25,000, because you can do a lot of trades in the day. You can do more than 3 trades a week. Because understand, if you are doing you want to do 5 trades, if you have under $25,000, your broker will stop you because of the rules. Okay, if you don't have $25,000, you can't make other trades, and this is bad. So for those who want to be a day trader for true for the following years, 1 year, 2 years, 3 years, you just try to practice with few shares. Try to practice. You can even, I told you this before, you can even specialize in one stock. You don't go to many stocks. You can just specialize in one. okay, and you follow one stock news always, especially when this stock is very volatile. You see the stock daily, it go up, it go down, go up, it go down. This is the most important stock that you should follow, because sometimes you go long, sometimes you sell short. This is what makes the money, is the fluctuation in the day. Okay, if the stock moves a little bit, like 15 cents, 20 cents, or 25 cents, if the stock is small, by buying a lot of hundreds of shares, you can make money, even if the movement is only 15 cents or 25 cents or 30 cents. But as I told you before, the day is always changing the direction. Sometimes the stock has only one direction from the beginning. Sometimes it opens, let's say, yesterday it was $20. Today it opens, let's say, $20, 25 cents. But it didn't go down, and from $20, 25 cents, it continued to go down, to go up until the end of the day. Okay? Now, this is one direction. Sometimes there is one direction down. The stock is $20. Tomorrow it opens, let's say, at 19.90 cents, and then it just opens, and then you see it collapse and it begin to go down. This is one direction. But in general, what I see, as I have traded like day trading, is that most of the time stocks, the first 5, 10, 20 minutes, they go up a little bit and then they collapse, or they go down a little bit and then they go up. This is the most important thing I have seen during trading stocks. And you, when you practice a lot, you will discover things by yourself. There are some techniques that you get and you get trained to, but sometimes stocks have many directions, and these are very, very difficult. So you should be as quick as possible. Sometimes a stock goes 10 minutes, 5 minutes, 20 minutes up. You can make money even in this few minutes. You can make money. And then if it stops, it go down, you just sell and you have your profit. And then you just wait more and see where the stock is going. Is it going to be going up again? Or you see that it's going down, and especially when the whole market is going down, like the mood of the market gives you a general indication where the stocks will be. But understand that not all the stocks are the same. So this is just to understand when we speak about opinion about a trader. You see, that's why always you have one is correct, the other is wrong. Always. So if, for example, the whole day, okay, I'm just speaking about the whole day. One day, one guy from the beginning, he sells short, okay, and you buy in order to go long. At the end of the day, there is one who is wrong, you or the other guy. That is the market. So the market is based on our opinions about the price. Although we see the same price, but we have different opinions. And that's why trading is not that easy. So you should practice, always practice until you get the confidence and you act as you see. And it doesn't matter when you lose some time, because no one can make it always. It means if someone tells you, I always make money in each trade, this is not true. Okay, it will never happen like this, because wherever you are good at trading, you have some trades that are bad. But those people who react very quickly, okay, they react very quickly, very fast. When there is a change, when they see there is a change, after a few minutes, they should change. They shouldn't wait 1 hour, 2 hours, 3 hours waiting, and the market is against you, and you wait. It means when you are waiting, you are losing. And this is not good in your business of trading, to wait when you see a lot of money are taken from your trade. So that's why traders should be quick in action. If you just buy something, you think that the stock is going up, it doesn't work, you should exit and see if the stock is going down, you can sell short. It means you change your opinion according to the price. There is no commitment in trading that, for example, in the morning you say, okay, in the morning, whatever happens, I'm going to short. And you begin to short and you see the stock is going up and you say, let it until the end of the day, I don't care, and then I buy back, whatever. This is not really a good way or a good strategy to do day trading, because understand that you are playing with your money. You are giving your money for free to the market. Other traders will take your money, because you should never be stubborn in trading. Here I'm speaking about day trading, okay? Because I'm not speaking about swing trading or position trading or other kind of trading. I'm speaking about the day trading, where you should buy and sell according to the price. If you are wrong, you should correct your mistake, sell. If the stock is going down, you sell short, and don't be scared. It's just a game. This is just a game of following the price. Okay? So even if you have, for example, friends, there are some, maybe you don't know about it, some people, they don't know about it. Even if you are friends, 3 friends or 4 friends, you are friends, you can either be in the same room, or each one in his house, but you have the same account. You can call your friends and you say, okay, at 9:30, what do you think about this stock? You see, oh, okay, let's sell short. And all of you guys, you have the same account. Let's say each one has, for example, $10,000. You are 5, you have $50,000. Okay? And this kind of accounts, it exists. Okay? It's one account with many people. Okay? You can trade together, or you can, someone is trading and the other, they don't trade. It happens. Okay? But it's better to have a plan if you want to do it together. Some people, they like to be together and to have, for example, opinion of others. You say, what do you think about this? Is it, do you think it's selling short? Oh, okay, we go all and we sell short. We have 50,000, 10,000 for each one. We sell short and we see. Okay? So this is something that some people, they like to be with other people. Now, if you are alone and you want to do it by yourself and to have a career in this as a business, so you should do like I always say this: in order to be a boxer, you should train for years to be a boxer. It's not one night you do exercise or you box and then you become a champion. So you need time, and everybody can do it. For example, bodybuilding. You go to exercise, everybody, if you go, you can make results after 3 months, 6 months, 1 year, or 2 or 3. So everything is with exercise, with practice. There is nothing, if you expect that someone gives you a technique and it always works, this will never be working. Why? Because the market changes. The technique, it's one technique, but you should have many techniques according to how the market is moving. And this, it takes time. I always say to all the people who are listening to me or who are my students, it takes time to be good in something. You need to practice, you need to learn techniques. And if you don't have money, you just want to try as a beginner, you have the chart, you put stocks, and each day, if you have time in the morning at 9:30, you see the news, if there is something news, and then you pretend that you are going to do the trade, and you take the chart and you trade. You put a line where you buy, and you should be serious. You should be serious, as if it is your money, and you buy, for example, 500 shares or 1,000, depending on what you think, and then carry out the trade as it is true and continue. If you feel good, it means that you are good. You just have to have an account, you fund it, and you begin to trade. And there is no one who begin and begin successful. You need time, and I always say that you need time to work on these things. So, as I told you, in the market, we have always two opinions. One is going long, it means he thinks that the stock is going up, and the other, he will be selling short, thinking that the stock will be going down. Although you have and you see one stock and you see one price, but your opinions are different. This is trading. And by the end of the day, there is someone who is making money and the other is losing money. That is the market. Okay? So thank you very much, and see you next video.